Here we go. Let's take a look. Now we are in a sell market, a sell side market. We have this automated algorithm. We have the update that Gerald's wrapping right now. That will get us into these liquidity grab shorts or longs only with trend. The new update will only go with trend. We have just walked through these trades. I cherry picked these trades for everybody in the room on the microphone this morning. Right here, it just took a trade again. The neat thing about the algo is that you can adjust your stops. You can see your stops right here. You can adjust them by point and click. Point and click, and you adjust your stop where you want it. And then also target prices. Now, what I showed traders here this morning, which I want to show you, is these zones come up, these buy and sell zones come up and tell us where our overall big institutional push will be, or our sell and buy zones. So we just ran a couple trades here this morning showing how the push is down once we broke outside of this zone. This was our zone. Once we broke outside of that zone at that level, we took the short side of the market, and we had 3 trades in a row that just worked out from liquidity grab shorts off the smaller Renko size. And so that will show you exactly where you need to be on the right side of the market. So if you are in a downtrend, let's take a look at this real quick. If you're in an uptrend, first of all, since 5 o'clock this morning, 5:30, we've been in an uptrend from 5:30 to 6:35 in the morning. If you noticed, it came down to my demand zones and never broke. Demand zones never broke. Demand zone here came right down and we'll stop to the tick, and we'll stop to the tick there. In other words, these zones keeps on the right side of the market. So if they're in an uptrend, we want to look for liquidity grab buys only. If they're in a downtrend, we're going to look for liquidity grab sells only. So if we are red, we're going to look for shorts. This was a short zone this morning. These distortion in prices were all short liquidity grabs off the smaller Renko size. All right. So that will let us know. That will let us know if we are in an uptrend or downtrend, and it'll let us know if our longer bias is up or down. Okay. So we know that on the liquidity grabs that we had this morning, all these liquidity grabs that we've had all these algorithm buy our shorts this morning. Why? Because we broke my demand zone, and I said this live in the room. I showed them how to run the trade. I said once we break below 53.30, this low end of this demand zone, I'm going to look for the first liquidity grab short. And once it did, it fell 10 S&P points. And I told traders this as we were ticking down on the microphone live. I said, if we break this demand zone on the larger Renko size, if we break the low in this demand zone, I put them up for them. I put a line in the room at 53.30. I said, if we break 53.30, we should fall a possible 10-point possible move. And it sure did. The 53.30 broke, which I'll show you. And you can cherry pick your trade. Here's the algorithm. You can turn the algorithm on, let it go to work. Now, I have a $300 stop loss and a $300 profit target on this. It's made 1, 2, 3, 4 trades in a row. If you look in the algorithm, now you have an option of just doing dollar value amounts. So I have a $300 profit target because it's a news day, so I extended my targets. And I got a $300 stop loss. $300 profit target, $300 stop loss, right? So you can adjust this to how you want to adjust it, depending on the Renko size you use. And I have it going 2 contracts. It looks at the dollar amount to get you out. In other words, you're not risking more than $300 per one contract. It's trying to get to a profit target of 300. Now, right when it enters, you'll see a red target line that goes at $300 and a stop loss of $300. And you can click and adjust it to trail it if you want. Okay. You can, so the new algo's a dollar-based amount, not a tick-based amount, saying you don't have to get to 6 ticks or 5 ticks and then break even plus all that stuff. You can do that as it tries to get to the dollar amount. I have it, the stop ticks at 1,000 ticks, and target is 1,000 because it overrides it and looks at the dollar amount. But you can do it where you do, let's say you do 5 or 6 contracts on the micros or the big contract. You can say, okay, scale me one at 4 ticks, one at 6 ticks, one at 8 ticks, one at 9 ticks. Well, it will scale you out trying to get to this $300 profit target while maintaining the total amount stop loss of $300. So this algorithm's telling me it's not going to take no trades less. I mean, it's going to get us out of a $300 loss no matter what. If you want $200, put $200 in there. If you want $100, put $100 in there. If you want your profit target to be 100, depending on 1 contract, 2 contracts, 3 contracts, 4, whatever, it will take the total amount of value from a dollar standpoint, not a tick standpoint. But as you're trying to get to that $300 profit target or stop loss, you can put in your stop ticks to do that. You can scale it 4, 6, 8, 10, 12 as it's moving towards your target. So this morning, right, I put the line in the sand right here. The demand was right here. Right here was my larger demand zone. There's my demand zone right here. And I said, listen, if we break this on the microphone, we break the low of this demand zone, which the exact level is right here, right here. I'm sorry, this zone, this demand zone. Sorry about that. If we break, there's our new supply zone right here. So we're still looking to short. But here's our demand zone. If we break 53.30 on my larger demand zone, then if we break that, we're going to look for the first liquidity grab short. Right there it was. I said, look for a possible 10-point move on this trade. There's where it broke. It broke 53.30. This algorithm will cherry pick trades for you. If you stay on the side of the demand zone, it broke down. I said, take the first liquidity grab short. It got short at 53.23 3/4. It got low as 53.12 1/4. And I just told traders before it broke this demand zone, we got a possible 10-point move on the S&P before it even happened after news. I said, wait till after the 8:33. We're going to stock the trades. I said, you can cherry pick your best liquidity grab if A, we break through this larger demand zone and we're look for the first liquidity grab, or B, we get above the demand zone, look for a liquidity grab buy. So in other words, you can cherry pick your trades on this smaller Renko chart based upon your larger demand and sell zones. So now look at the market. What's it doing? Where's my new zones? My new zone is now 18 3/4 and 8.23. 18 3/4, 8.23. So my big institutional push, my supply zone, as the market's going along, I know if we close above this outer edge up here, and I turn green down here, I'm looking for the first liquidity grab buy. I'm going to look for the first liquidity grab buy. If it doesn't, I'm just going to keep maintaining short bias because my big institutional push is down. I'm red up here. And I know my sell zone, when they're still trying to grab liquidity. The only time I'm going to change my bias is if I break outside at 53.23. We're going to go. Now, if you only want to trade the transitions here are where you can make the 10 to 15 point runs. Because I did this ahead of time for you today. This is a transition where you can possibly make the 10 to 15 point runs. And I'm showing you exactly how to do it to the exact bar. This is where you can make the transition for the 10 to 15 point runs. This is where you can make the transition from the 10 to 15 point runs right here. You had 3 trades this morning on a transition. I'm showing you exactly how to do it to the exact candle using the automated algorithm and using our larger push chart right there. There's your transition. Right when you broke the outer zone. Now, look what just happened. Look how important my zones are. It just hit it almost at the exact tick. It hit to the almost exact tick. So can you buy? No. The larger Renko chart suggesting what? And my demand and supply zones suggesting we're still going down. Look how it just got rejected almost to the tick. So as long as these distortion prices here are not even close to breaking my outer zone, you got to think short. If you wanted just to cherry pick the transition phases, like I gave you guys a big heads up on that 10-point possible move, I said you got a possible 10-point move coming. If you just want to trade these transition phases, you can. With my automated algorithm, because you look for the first liquidity grab and you're getting the big push, you can trade these transition phases. Here says 5 o'clock this morning. How many trades have you had? You broke the outer zone there. We'd look for the first liquidity grab buy with the automated algorithm. Look at this. 1, 2, 3, 40 potential points on the S&P in 4 trades. 40 potential points. They all move significantly because you're getting the transition of the market, of them transitioning to a trend change. So what I do, I always keep this larger chart in mind when looking for transition buys. So your strategy could be this. You could say, hey, I'm not going to buy, I'm not going to trade until I get a transition phase today when I break the outer zone of 23. So I'm not going to look to take any trades until I break outside of this level. And if I break outside this level, the price will go like this. I'll look for the first. I'll turn the algorithm on because it'll be green, green. This has to be green, green. I'll look for the first liquidity grab buy. First V bottom, liquidity grab buy, and the market should shoot up. But right now, what's the market doing? We're in line. We're red, red. So we can still do what? Still short. Still keep shorting the market. Right? So you can look for the first liquidity grab short on what? On the algorithm, because we always want to stick on the dual trend filter right here. This is the dual trend filter. Red, red, green, green. But I know the line in the sand. Now it's going to move on us. 08 3/4. So you can see, I'm just moving this down, but you can eye judge it. 08 3/4. 06. So you can eye judge as we move down, right? Here's the first liquidity grab short again, because it's lined up, red, red. Not only got a $300 target price and a $300 stop loss, but look at that move. The fill was 53.11 It's got down to 86.25. Why? Because you're sticking on the side of the long-term trend. Now, where's my supply line move to? My supply line moved to here now, which is 5,300, a whole number. So I can't even think about looking for a buy setup until I at least get above 5,300. And the other side, 5,301. So I'm putting these on there for you as it moves down. But you can see as these move down, your supply line moves down with it. See that? So it lets me know you got to just keep thinking short bias. We're almost into a big pocket down here also. Now, you can take a buy setup, guys, if we get in the transition phase. When will the transition phase happen? We've only had 1, 2, 3, 4 trades this morning since 5:30 this morning, and they were all nice 10-point potential moves. You can't do it till you get above this larger demand zone or supply zone. It's got to close above 98, the whole number 98, 5,300 here. Or we can't even think about a long. You just keep thinking short, right? You can't think long until you get above there. So it keeps you on the right side of the market all day. But let's say you just wanted to trade cherry pick transition phases. You can't do it until you break above these new supply levels. Look how it keeps adjusting because you're only shorting the market right now. So it always keeps you on the right side of the market, right? Always keeps you on the right side. There's another liquidity grab short, the automated algorithm. So always look at this larger Renko size. Now, there is one way to find out if a trade is weak or stronger. So here's my dual trend filter, right? Here's my dual trend filter. If you're both below my dual trend filter, meaning if you're both below my outer zones, which has been back tested for 30 years as the best zone of reverse price, and you're below my inner proprietary Renko bar type, and you get a V-top, this is a sweet spot trade. We had a lot of good trades like that yesterday. So this shows major market weakness, okay? So let's look at the zone. It's touching right on it, right? Look at the sell zone. So is the market a buy-side bias? Yes or no, guys? Are we buy-side or sell-side still? Are we buy-side or sell-side still? Which one? Let's see if you guys got this down. Are we buy-side or sell-side still? Buy-side or sell-side still? 91.25. There's our zone. We're sell-side, right? Sell-side, so we're still looking for shorts. We're not going to even entertain about looking for longs until this larger Renko size is what? There's 87.25. Look at that. It stopped right to it, guys. Look how important my zones are up here. Market stopped right on it, didn't it? Look at that. You can't even think about a buy. You can't even think about a buy until we get above here. Until we cut through the supply zone. You can't even think about a buy. You just keep shorting the market. Right? The algorithm went short again. Another short side set up on the algorithm, automated algorithm. The automated algorithm is going to only short with the trend, guys. The trend's down. Just took another short at 79.25. I got a $300 stop loss, $300 profit target per 2 contracts. Just took another one. But my bias is not going to change till what? My bias is not going to change to the upside until what? Until I get above my zone. Look how my zone stopped almost to the tick again. Look at this. You think that's just by luck? That's coming right to my zone reversing? Look at that. This is the new update you're going to get. I know exactly where the transition phases are going to happen. Now, the next transition phase is going to be here. Because the transition phases, or you can possibly get a 10-point possible runner. So now I'm at 84.75, 81. 81. 84.75. Here's my supply line. As long as I stay below that, we're still shorting. If I get above this and turn green, this is where you're going to look for a transition. This is when it's going to break on my outer institutional zone. And then you can see a possible 10, 15 point possible run in the S&P. But until then, you can't do it. You're still short, right? You wait for red to come back up again, and we can use the algorithm to go short again. Okay? So as long as this stays intact, we're looking for this big pocket to drop all the way down to 73. So I just showed you how we can cherry pick our trades on the big transition phases. Now I'm showing you exactly how to get in to the exact candle, I'm showing the exact candle to get in with a small stop for a huge possible reward. Really, we're taking a small risk for a big reward on a transition. If you want to do transition phases like that. That's how we're going to do it. And then why the market's still moving down, you can take all these liquidity grab shorts. As long as I don't break the integrity of this zone. If I break the integrity of this zone, we got to stop shorting. These are the potential big possible runners right here on the transition. We've had 4 of them today so far since 5:30 this morning. We're working on our 5th one right now. So use this chart to let you know where the major supply and demand is in the market at all times during the day. I know at all times in the day where the major supply and demand is based upon a larger Renko and smart money push. I know if they stay below here, then you got to think short when it's red, red. If I get above here, now watch. Now we're red, green, right? We're in a chop market. If I turn green, green, here's your next, I'm going to set a trade up for you guys. If I turn green, green, and I cut above here, I'm going to look for the first liquidity grab buy with the automated algorithm for a big possible push. I'm looking for a good sizable 7, 10, 12, 15 point push. If I get above here and we turn green, green on this outer zone. If I turn red, red, then I'm still with my big push. And now look for the first liquidity grab after that also. So we're going to wait. Right now, you see it got rejected on my zone again. I'm just putting these on here so you can eye judge it better on the chart. It's the same zone up here. I can cherry pick when the best liquidity grab is going to happen on a daily basis all day long by doing this. All day. All I got to do is find out where my outer zones are projected. If I'm red, I'm in a downtrend, and if I'm going to break outside of that outer edge, which is 85, 80 3/4, 85, this is going to change my direction to the upside. I can buy when I get above there. If not, I want to turn red, red, take the first liquidity grab short because guess what? I'm into a possible pocket, and I go down to 73. So these two charts can feed off each other. With my automated algorithm, you know exactly when to use it and to look where the next push is. Right now, they rejected my zone again. They rejected it here earlier and kept going lower. They rejected it here, kept going lower. I'm not concerned with the upside until I get above there. If I get above there, then you got a possible transition phase, possible 10-point move to the upside until I break the line in the sand, which is 85. Until then, you got to still think short, right? But if it breaks here, I got a possible transition phase, and we can get in the automated algorithm on the first liquidity grab buy. And you got a possible push right there, just like we did on all these other ones this morning. Big trade, big trade, big trade, big trade. I said a 10-point drop before it even happened this morning. I said this thing could drop 10 points on the transition phase potential. Sure enough, it dropped over 10 points right after we talked about it. Okay, these are very leading indicators. This is a leading indicator. Look at this. We're leading. We know exactly the breaking point in the market. We know the exact breaking point in the market right now, 85. As long as we stay below 85, then we keep shorting when we're red, red. If we get above 85, we'll let our dual trend filter turn green, green. And we'll look for the first liquidity grab buy. Okay. We're into the zone again. You don't get excited till you break through the zone, start getting way above it, turn green, green. We don't get excited. I'm not worried about this push here. I cherry pick my liquidity grabs. I know exactly where the potential push could happen, and it's not going to happen until we get above 85 because this is still a supply line. This is selling. The big money is looking to short the market. If you look at these larger charts, it tells you exactly where they're selling the market. They're grabbing liquidity up here and bringing it lower. Grabbing liquidity up here, bringing it lower. Grabbing liquidity down here, taking all the counters out, bringing it higher. You're right with the smart money. They're grabbing liquidity here, stopped at the exact tick in my zone, bringing it lower. Bringing it lower in this distortion in price. We're right with the smart money with this. Comes down to my demand line, holds it, liquidity grab, smart money buy, smart money buy. Comes down to my demand zone, smart money buy, right? We can get in the transition when the smart money is transitioning. You can see how accurate this is, extremely accurate. Stopped almost to the exact tick, only went above it about 2 ticks, stopped to the exact tick there, right on it by about tick or so, plus or minus, liquidity grab sell. So we know what they're doing because they're leaving their footprint. So we're not going to get excited about the upside until we break that. So you can just trade off these two charts just based upon that. You don't need to use this left chart over here unless you're looking for what? Now with the new software, you don't need to use this left chart with the new software unless you're looking for what? Failure with trends. I'll go over that a little bit later. This is all you need to look at. Right there. I know exactly where to cherry pick trades. I know that if I turn red, I'm taking the first liquidity grab short. If I turn red. Why? Because my big push is down. My institutional push is down. They're grabbing liquidity. Consequently, I know when to look for the first buy. When? When I get outside this exact level, 85. There it is. So now I can go through the whole trading day knowing exactly where to look for the highest probability trade to the exact bar, exact candle. I did it for you this morning. You saw it this morning. I gave you about a 4 to 5 minute heads up on a 10-point potential drop. It fell just over 10 points. Now I'm telling you right now, if we get outside of 85, we're looking for a push up. So it'll turn green. We're looking for the first liquidity grab long. You got a possible push up on a transition phase. All right, so this is how you can continue to do it during the day. Then you can use our automated algorithm to fire in the trades. Use our automated algorithm to fire in the trades once and just stay in the direction of the overall trend direction. Now we're in a possible transition phase to the upside. Now, if it closes, if we don't get a buy side setup, if we don't get a liquidity grab buy, and we break down below this zone again where new zones have printed, if it closes below here, 81 again, we'll get right back and look for red, look to short the market again. But right now, the market's doing what? The market's showing strength. It's showing strength while you're above the zone. So we'll see if it can get a V bottom on a pullback. The market's showing strength right now. And if it doesn't do it, fine. Get back below our zone. Our lower zone that's printed over here, our institutional zone. Get back below it, and we'll look to short the market. But right now, you can see the push is higher. Look at how the market reacts to these zones. The markets, I look at my transition. I could just see the change in sentiment just like that. Just like that by looking at these zones. I just saw the change in sentiment before the push even happened. I can see it happening. You can see it because we're above my liquidity grab zones, right? So you can see before this even happens, guys, on possible transition phases to the upside or downside. Now, we'll go right back to shorting the market once we get back below this level. If you wanted to match up turning red, and you only want to trade red, if it gets back below this zone, we'll go red, look for the first liquidity grab sell. But right now, it's the push is trying to be up. They're trying to transition it up right now. But if we get back below this lower zone of 81 and we turn red because we never got liquidity grab buy, if it doesn't give us liquidity grab buy and we get back below this zone, we'll look to short again. Right? It's trying to transition right now. Trying to transition. Right now it's red-green. Got to wait till it turns green. We're above the zone. Then we'll look for our first liquidity grab long. If not, I'll wait for this to get back below the zone again, and we'll look to short with overall big trend. All right, but right now they're trying to push it up. You can see what they're trying to do. They're trying to push it up. They're trying to push it up. Because if the market is really weak, guys, think about this. If the market is really weak, it would stay below my supply line, my supply zone, my big money supply zone. But they pushed it up. Right there. They start transitioning it up. This is where the smart money start pushing it up. Right there. So we won't be active sellers in the market till we get below here. Keep it simple like that all day long. Don't make it difficult. Now, if you want to do the transition rate when it broke out, the algorithm took the trade. Algo took a $300 trade here. Why? I turned it on because I love when we break out of the zone. As soon as I see let's break out of the zone, here, let me show you. As soon as you break out of the zone, as soon as you break out of that zone, that's a good time to look for a first liquidity grab pullback. Right? You can trade it or you can wait to the first green. You can wait till it turns green. As long as you stay above the zone and then look for the first liquidity grab pullback, right? So we're still bullish. Look at our zones, still bullish. We're not going to get bearish until we break this level here. The exact level's 52.81. If we break below 52.81, what do we want to do? We want to look for it to turn red, right? Everybody got it? We want to turn red. Want to turn red. That's breaking back with the overall big trend of the market back into below my zone. And then we can start looking for sell side setups. But right now, they're trying to keep it up currently right now still. Going into the New York Open. And here's another thing. You don't have to trade the New York Open, guys. 3 minutes before the New York opens and 3 minutes after, you can just sit if you want to. It gets fast. But you can see how these transition phases, this is the first liquidity grab long after transition phase. And you use the algorithm to fire in and out of that trade based upon that. Okay, so if we cut below this zone, if price cuts below the zone, it turns red. We're looking for the first liquidity grab short. First V top, first liquidity grab short. Why? This is the big level. Look at this level. It keeps you on the right side of the market. It tells you where the big push is possibly coming. Right now, it's in a key supply zone right now. We're going to see it make its decision. Right now, the bias is still up. Right? Now, if we cut below it and turn red, we'll look for the first liquidity grab short and get in the direction of this big trend, because this could possibly be a big liquidity grab they're trying to do. All right? Everybody understand this? Everybody see what we're doing? All right, Gerald's updating the new he's wrapping the new liquidity grab trader. We'll make sure we're getting it out to you guys, all you members. We're going to be going over all next week. Also, going over all next week for you. The key is this. If you're trading smaller Renko sizes, you can cherry pick which V top or V bottom is going to happen based upon this chart with the new update. If you new update, you put this on here. I'll show you how to do it. I got a PDF done for you, small PDF that tells you how to stay in the direction of big trend. Look what it did. Look how it came down to that demand zone, never closed below it. I know exactly where the smart money's trying to push based upon this chart, right? We're not looking to short red until we get below this lower level of 81. You can look to buy, though. You can look for liquidity grab buys, because you're above the zone, right? So use the algorithm, which it did another trade here, because you're above the zone. All right, it's only going to take trades in the direction of the zone. Zone up, it will take direction buys only. Zone down, it will take directional sells only. So if you want to trade these transition phases like this, you can turn the algorithm on and let it get you in on when you're breaking through that level, let you get you in on that type of trade. Okay, New York is opening up. Wait for about 3 minutes, and then we'll go to work, guys.